Hello, this is Mitch King with TradeStocksAmerica with the Thursday evening, March 26, 2009 Daily Stock Report. We're looking at the Smart Dumb Money Confidence Indicator. The Smart Money number has gone down, and we're monitoring this as a indication of overbought condition. It's a contrarian indicator, somewhat like the put-to-call ratio that Marty Zweig has done, or the volatility index, which is not really giving us any reading. We looked at that last night. Let's take a look at another indicator. Here's that T2108, the percentage of stocks above the 40-day moving average. Discussed that last night. Here on the right, this number is 75% of the stocks that are traded are above the 40-day moving average. So this number is up quite high. If we look at the previous times that this has been high, you're going to see right here, right down in the crosshair, you're going to see a high in the S&P 500, which is the Standard & Poor's 500 in the orange line. This is a comparison. So we saw the real high here, which is a very extreme high percentage of 84-85% in January was the percentage of stocks that are above the 40-day. So we've got here was a high, here's a high figure in here, and we're right in here. So it's just more support, the idea that we could be overbought. It seems like that to me, although the market could go up a little bit. What's interesting here is the Dow is up 174 points right in here, and we saw the banking stocks were mostly down today, and U.S. Bank was down until that last 45 minutes to an hour in the market. We're thinking that the banking stocks are going to turn over. I don't think it'll be as sharp as we originally anticipated, but because of the market is focusing more on the positive news, some earnings releases that came out, the market seems to be ignoring the negative news like the downgrade in GE and Berkshire Hathaway stock from AAA to a AA minus. So the sentiment seems to be shifting toward the positive side, but our focus is on the short side on the banking stocks with 3 or 4 long positions in some selected stocks. Let's take a look at some daily charts. Here's a year and a half of data on Wells Fargo. Still looking for this to pull back a little bit. I'm still looking for Wells Fargo to pull back along with several other banking stocks, and we'll look for evidence of that this coming week. Very possible that these stocks could turn into the type of chart that U.S. Bank has come up with. It looks like we're having a short-term uptrend here. It's one of the more stronger ones along with JP Morgan, so this has been reduced or actually stopped out on a couple of these bank stocks. So this is no longer in a corrective cycle that we were in, and the last time we saw that was several days ago when this was heading down and looking like we were going to dribble down, but the trend line is still up on those on the short term, so they're dangerous to be on the short side. Hopefully some of your stops, if you're still have them short, you're going to have to reduce some of these in case they continue to march up like the Dow and the indexes appear to be doing. Here's the Dow Jones. It has a real sustainable look to it recently, and it still think that there is some slight pullback that's coming, and when that slight pullback, we're looking for the banking stocks to kind of accelerate its decline and give us an opportunity to come out of these with some fairly decent profits. Not as much as we originally thought, 40 to 50%. And this is our 4th cycle in these banks. We were long here, right here, and then we went short from that top, and then we went long again, and then now we're short. So the swing trades have been good. It looks like we're getting into an environment where the intermediate trades are going to start doing good again, but that may be premature to jump into a lot of intermediate term long positions. So you guys take care, put the odds in your favor, and we'll talk to you this weekend.